When I discovered Bitcoin, I had to go on a journey of trying to understand and ascertain whether this asset class was real, whether it was vaporware, whether it was a scam, or is it actually something that has value? Is it something that has intrinsic value? Is it something that can continue to grow, or is it a bubble that's going to burst? And when you go through this journey, you realize that so many things are against you. The most influential, very smart and intelligent investors that you may listen to on the mainstream media are usually telling you that it's going to zero.
There's no value, it's a bubble, and I promise you, and you're right, it could go to 50,000, it could go to 100,000, but I'm certain at the end of the day, it will end up close to zero.
The greatest scam in history, adding that it's a pump and dump scheme like anything the world has ever seen.
Bitcoin is going to zero. Zero. When it comes out, zero.
They're usually telling you that it's worthless. They're usually telling you that you're probably mad for making any meaningful investment into this asset class. And it's just in this video, I want to try and explain that having exposure to this asset class is one of the reasons I started this YouTube channel in the first place. When I came across Bitcoin, it was just a journey in understanding what money is and how basically Bitcoin is just simply scarcity. I'm going to keep this video extremely raw and just show some of the images that I've collected over the last 6 months that showcase why it's reached 100,000, why it could continue to grow. And will there be ups and downs? Definitely. There'll be opportunities to buy Bitcoin at probably less than where we are right now, or there might not be. Either way, it's just important to understand where this started. And so the first image that I'm going to show is Satoshi Nakamoto. And this is a monument that was built for him in Switzerland, of all the places, like the most prominent place for money on the planet. The central banks are all there. And so it's incredible. It's incredibly profound. What he did is he coded in a Genesis block in 2008, 21 million Bitcoin that would be dispersed over a set period of time into 2114, and every 10 minutes a new block is mined, and the reward for this block is Bitcoin, and these Bitcoins become half every 4 years. So every 10 minutes the block is mined. You didn't need that much computational power in the past, whereas now you need very, very large supercomputers to be able to process the computational power involved in solving the mathematical questions. I have got a more informative video. It's the first video I ever made, and I'll put the link at the end of the video. But for this one, I'm just going to keep it simple. He coded 21 million into the Genesis block. It's extremely hard to reverse this now, and at this point, it's basically a network that can't be reversed. It's highly adopted. You'd need, in 2017, 2 trillion personal computers just to be able to reverse one transaction. And since then, it's grown even stronger. So he is someone who is profound in cryptography and in encryption, and it's just incredible to kind of understand the creation that he has made. I made this video about 4 months ago, and it was just basically trying to showcase how I got to this understanding of this asset class and why it's something that I believe has value. This book by Satoshi Namos is The Bitcoin Standard, and it basically goes through how basically Bitcoin is something that's scarce. It's something that can't be inflated. He goes through the fiat system and how the monetary currency units that we use, from pounds to dollars, I'm in Hong Kong, so Hong Kong dollars, are just extremely easy to make more of. And so Bitcoin doesn't really go in value. It's a neutral currency. It's a neutral unit. It's the measuring stick for how much more Hong Kong dollars and pounds there are in the system. And as that number grows, as the fiat currency that we use to transact with grows, Bitcoin grows as well because it absorbs the extra inflation. And that's basically why it goes on these exponential increases, because the money supply continues to be injected and stimulated into the economy during the business cycle. So these secular trends, so there's always a 4-year period where Bitcoin has these extreme moves. So every 3 years, it goes up, and then it'll have a year where it corrects and it goes down. And then another 3 years, it goes up, and then another year, it goes down. And that's since 2008, and it's quite easy to see the pattern. So this book, I highly recommend. It's definitely changed my perspective on understanding this asset class and why it's got value. History of money. This picture really stands out to me of just what is money. Basically, this is a rhinestone. It was used by the Yuppies people. The reason why it had value is because it was on a neighboring island, and you could only get them from this island. They required laborious work to bring them back from that island to Yap, and that's where they'd be transacted. They'd be left in the middle of this town. They would be used. They'd be publicly declared, so payment would be publicly declared. And you wouldn't see value in the stones. The only reason they had value is because they were scarce. Then a sailor by the name O'Keefe was shipwrecked on the Yuppies Island. He saw that they used these stones for transactions. He had superior shipping technology, so he was able to actually get hold of these stones quite easily. He saw the coconuts on their island could be used to sell to oil producers, and he saw an opportunity there. He brought over the rhinestones, and he brought a lot of them over. The chieftain of the island said, anyone who uses the stones that O'Keefe has supplied, it will be illegal tender. But everyone saw that these stones are the same stones that they've been using for decades, so why not just take them? And that led to the demise of this currency, and it led to the demise of the Yuppies people because the money was inflated to the point where it lost its value. This is another example. It's the agri beads of West Africa, where again, the Europeans saw that African people in West Africa would use these agri beads to transact. So they very easily made them in Europe, brought them over to West Africa, and expropriated their wealth and their resources that were valuable very easily. And then again, this led to the demise of these societies across West Africa. The knocking of the door, the Grim Reaper, who basically starts at 96, 97, 98, 99, and then 100. And that door has now been knocked. Now, will we drop back down? Maybe. But at the same time, it's just such an important mark, an important level that a lot of people have been anticipating, and a lot of people have said, very prominent people have said, that it's not a mark that could ever be reached. So it's just a very important time to recognize that this asset class really does have legs. So the FUD, fear, uncertainty, and doubt, any asset class that's going to have exponential returns, it's going to usually be disruptive. And so you go through the journey of fear, uncertainty, and doubt. There are people who will probably not understand what you're investing in, and it's in those moments that you realize that you're early. You have to go through the fear, you have to go through the loss, you have to go through the mainstream media telling you that it's going to zero, because if you don't, the opportunity has gone because everyone is now in this asset. And at that point, it's usually hit a kind of stability where there's not going to be the same level of growth because it's just something that everyone expects and is used to. So that FUD, fear, uncertainty, and doubt, is just an image that I always think about when in the hardest times where there was 30% corrections and you see huge losses in days. You've got to get used to that, and you've got to become quite comfortable with it. And you become quite numb to adulations in the market, especially in crypto when it's just absolutely insane. This is another image that's really stuck out to me. It's innovation. You basically have the candle, then it was replaced by the light bulb. You've got the horse replaced by the car. You've got the newspaper replaced by online publications. And then you've got cash being replaced by a superior finite monetary unit, Bitcoin, which can't be inflated and just acts as a measuring stick in order to show how much fiat is being printed in the world. And that's why it goes up in value. These are some of the largest holders. So you can see here, Satoshi Nakamoto, who is anonymous at this point, and he's completely signed off from the world. We don't know if he's alive. We don't know what he's doing. He's got these coins, 1.1 million Bitcoin, locked away in a wallet. He'll never unlock it, and he'll leave it there, and that will allow for the supply to remain even more scarce. But you can start to see some of these incredibly large whales that have positioned themselves in this asset. You've got the Binance Exchange, you've got the BlackRock ETF. This is one of the biggest money managers on the planet. And these people come into an asset and they stay. these people come into an asset and they take over. And you can see in the second chart that actually the US spot ETFs have now, this is the more updated chart, taken over Satoshi Nakamoto. And that is in 1 year that this has happened. So you can see the adoption curve of this asset class is just continuing to grow. Some other honorable mentions, you've got the Chinese government, you've got the US government, you've got other exchanges. You've got a private company called MicroStrategy who have now been included in the NASDAQ, which means that there's going to be a perpetual bid where your index funds will just buy parts of the MicroStrategy fund, which will allow MicroStrategy to acquire more Bitcoin, which will mean that the scarce asset is going to just become more scarce as the price grows. Here again, some of the holders, you've got centralized exchanges, you've got miners, ETFs, individuals, companies, custodians, governments, OTCs. It just shows that some of the people who hold so much of the supply are usually those that aren't likely to sell. So these people, the scarcity of this asset, it's just something to really be aware of, that there's never a bad time to invest in Bitcoin. Obviously, when it's euphoric and everyone's really excited and everyone's talking about it, it's probably not the best time. There will be corrections, there will be lower opportunities, but you've got to go through some pain before you can get any of the gain of these markets, because at some point, your investment will go into the red, and it's holding it for long enough to see it go into the green. And that's what everyone has gone through at some point in this journey, if you're involved in crypto or if you have any Bitcoin at all. China were one of the biggest reasons for corrections in the past, because they were trying to completely ban it. But they have now become just accepting of this. They allow for private corporations in their stock exchange to buy Bitcoin and put it on the balance sheet. So it's just becoming something that they're more accepting of. When they approved the Hong Kong ETFs, they basically allowed for this gateway for mainland China's money to infiltrate into Hong Kong and access these ETF products, which is definitely something that's happened. So they've started to become more open and more accustomed and accepting of crypto, and especially Bitcoin. So it's just an extremely important development that shows that this asset is just continuing to become more solidified in the asset classes that we currently know. This is incredibly important. Like, the ETFs actually managed to bring in more assets under management for their Bitcoin ETF than gold. And gold's been around for over a decade. And within 1 year, the Bitcoin product that BlackRock offer has actually got more. And that just shows the extreme growth rate. There's an even better picture that I'll show you now. You can see within year one, this is the Bitcoin ETF within year one. And it just shows how much the demand for this asset is just continuing to grow. This is year one. I assume that the consecutive years that follow from this video, it will continue to grow. If it doesn't, then I'll look back at this video and I'll laugh at myself, to be honest. Again, this is another chart that shows just how it's completely just up and to the right. It's just vertical at this point. And there's not really any ETF products that have been launched in history that have shown this level of growth this quickly. And it's just straight to the sky. It just shows the interest. The market has decided that this asset class has value. This asset class is not going anywhere. It's going to be around. I look at this picture, it makes me laugh because of the fact that when you look at your everyone gets paid, but your paycheck is basically the bread. It's the fiat currency that you get. It's the pounds, the dollars, the Hong Kong dollars, whatever your currency is. And it gives you the ability to breathe. It gives you the ability to survive, but you don't get out of the jail. Whereas Bitcoin is the key. It unlocks the door, it unlocks the jail, and it gives you freedom. I just know that for a fact because it's definitely provided that freedom for me, and it's definitely something that just, it can't be inflated, it's constant, it's finite. And then as a result of that, when you understand this asset class, you understand that actually your purchasing power grows when you save in Bitcoin. Your ability to hold on to your energy that you've preserved, that you've worked for, grows when you hold your energy and you store it in a a scarce hard asset like Bitcoin. So just think of it as this impenetrable measuring stick that can't be inflated, and therefore it just continues to grow as everything else around the measuring stick grows. So as there is more fiat in the system, Bitcoin will continue to grow. Inflation is good for Bitcoin because Bitcoin will just absorb that inflation. The extra monetary units that are being printed by central banks will just be absorbed by Bitcoin. So I love that picture. This is just a quick kind of comparison of central banks and Bitcoin. So for example, let's just look at a few of these. You got the supply, endless, basically never stops. You can just print more and more, just like playing Monopoly. Whereas with Bitcoin, there's only 21 million. There'll never be more than that. And that's not fully out yet. It'll be by 2114 that the last block will be mined. So there's still so much time, but 19 million are currently circulating. Monetary policy, it's opaque, whereas with Bitcoin, it's clear. You know exactly what's going to happen. Centralization, it's ruled by the rulers of your country, governments, and individuals, whereas Bitcoin is decentralized, rules without rules. So basically, there are rules, but you are free in order to use it how you want to. And then the one that I really like is a store of value. Bitcoin is basically the best ever store of value. And as you can see, it started off at 0.003 cents and it's now at 100,000, maybe less, maybe more. But that's millions of percent gain. Whereas fiat is a melting ice cube, where if you hold or store your value in fiat, the currency of your country, your purchasing power will just diminish over time if you hold it for too long. So politics, that's definitely something that's changed within America, the biggest capital markets on the planet. We've got a pro-business, pro-innovation administration. And in this picture, you've got a majority of people in this administration who are going to have influential roles. They all have exposure, or the majority of them have exposure to Bitcoin, or they have exposure to innovative crypto blockchains. So they're also billionaires, which means that they are extremely successful in what they've managed to do within their own industries. And that's why this potential government are going to just have such a massive impact on the price of this asset. Soon as the Republicans were voted in, and not to get political, but as soon as they were voted in, you can just look at November the 5th, it was at 65,000, and it just went straight to where it is now, which is 100,000. So it's in such a short space of time, you can see the market realizes that this administration are pro-crypto, they're pro-innovation, they're pro-business, and it's probably going to mean that the price is going to be going up for a little bit longer. This is a really important animation, and it just, again, says so many things in such a simple way. You've got perception, you've got reality. What actually happens with Bitcoin is you think the perception of it goes up. But actually, what is happening is it's going nowhere. The fiat that you hold on to is going down and it's not stable. So the perception is that Bitcoin goes up and fiat stays the same, stable. Whereas actually what's happening is Bitcoin staying the same, it's neutral, and the fiat that you have in your country is losing its value. And that's it. Markets are simple. In the short term, they're voting machines, and that's where people can be more bearish and definitely doom and gloom boomers who may think that things are going to come to an end. And then in the long term, it's a weighing machine where actually the reality and the value is then realized by the market. And that's how I look at Bitcoin. It's something that is a asset that's now starting to become understood by more and more people, and therefore you see the weight, and you see the weight in its price. Global liquidity, this is what I talk about with the fiat of your country. It goes up as governments create more of this monetary unit, which is very easy for them to do. They just print it. You can just basically Google what it looks like when they print money, and they just have batches of paper being stamped with the dollar sign, and that's exactly what they use. And so you've just got this infinite global liquidity, and as that goes up, during the business cycle, when you've got a easing cycle where banks are being more pro-lending, interest rates are coming down, you're going to have this increase in money supply that then leads to an increase in hard assets that basically follow the fact that this money supply is growing. So they just absorb that money supply. This shows again, just as money supply grows, M2 money supply is just like the stimulus that governments inject into their economies for growth. As that goes up, the price goes up. So it's not really that Bitcoin's changing in its value. It's not changed at all. It's still the same exact network. It's just the amount of money that's being printed continues to grow. That increases the price every time. You can see the increase in global liquidity, M2 money supply, leads to the increase in Bitcoin price. And then as soon as that global liquidity starts to reduce, the price of Bitcoin goes through these crazy corrections. So 2 pictures that just showcase inflation, and also another picture that showcases just the importance of understanding the truth. So inflation, in a nutshell, is the Federal Reserve, the central bank. They inject liquidity into the market. They inject liquidity into the economy. They've got tools to do that. They lower the interest rates. They allow for more bank loans to be given out. They reduce the reserve ratio, so you don't need to have as much collateral in order to get more money, which I already see so much. And then the eligibility to take on a loan, like you don't need to qualify to be able to take on a large loan that you'll probably not be able to pay back and default on. So you can see here, Federal Reserve, spear going into something that I've covered with a circle. And that's what's happening to all of us when we save in fiat currency. Last picture, this is the truth. JP Morgan's CEO, Jamie Dimon, has publicly been against Bitcoin since the adoption of it. And he actually said to any of his traders at JP Morgan that were buying Bitcoin, he publicly said that he would fire them all. But in that same period of time, he was accumulating it. So what happens is it's these very influential figures who understand, they're very smart. They understand the asset, whatever it is, if it's copper in the past with George Soros, if it's different green belts that people want to occupy for building residential buildings, they all publicly say that this is a scam, that this is worthless, and then behind the scenes, they're buying it so that they have a chance to position themselves. And this is exactly what this person's done. And you can see in this picture, it just showcases what he's doing. I've covered this, the area with a circle just so I can actually get this video out. But not that you can't know this stuff, but you don't know you need to know it. So it's basically, it's not that you can't know this information. This information isn't proprietary to me, and you don't need me to tell you this, but it's just that this is extremely unaware for most people. Most people don't realize that they need to know this, that you actually need to realize that JP Morgan CEO is actually a behind the scenes Bitcoin supporter. So I ask the question, is it relevant? And I hope that this video has helped you understand just some of the reasons why I hold this asset and why I think it's got value. Could it be relevant? I think that having exposure to this asset class that has been very clearly detailed by BlackRock as you should have 1 to 2% exposure to this asset, it could be very relevant. And I would urge everyone to read the Bitcoin Standard. I'd urge everyone to watch this video to the left of you on the screen and just try and gain an understanding of what this could be. I believe that it's got value. I believe that it's definitely going to be here to stay. So I hope this helps. Thank you very much for watching. Remember to like, leave a comment down below, and hit the notification bells, and I'll see you in the next one. Goodbye.